A lot of beginners ask me the same question. If I could only pick one ETF to invest in, which one should it be? And honestly, it's a great question, because the entire point of ETFs is simplicity. So today we breaking down what people really mean when they say one ETF that covers everything, and I'll show you which options actually give you full market exposure without needing a complicated portfolio. Let's start with the idea itself. When someone wants one ETF to cover everything, they're looking for a fund that gives broad diversification, low fees, long-term stability, and enough growth to build wealth over decades. Basically, they want the entire stock market in one investment without having to pick individual companies. And the good news is, this is actually possible. The first and most common answer is a total market ETF. A total market ETF gives you exposure to the entire US stock market. Thousands of companies, big and small, all inside one fund. Instead of choosing between tech, healthcare, financials, or energy, you're buying everything at once. This is incredibly powerful for beginners because you're not trying to predict which industries or companies will win. You're simply betting on the long-term growth of the entire US economy. The most popular total market ETF is VTI from Vanguard. VTI owns thousands of companies across every sector. If you're looking for simplicity, diversification, and long-term growth, VTI is one of the strongest single ETF portfolios you can build. It's low-fee, broad, stable, and follows the entire market's performance. But total market isn't the only one ETF solution. Many investors prefer something a bit more focused, like the S&P 500. Instead of thousands of companies, the S&P 500 holds the 500 largest companies in America. These are the most dominant, stable, and influential businesses in the world. Apple, Microsoft, Amazon, Nvidia, Google, they all live inside S&P 500 ETFs. The most popular S&P 500 ETF is VOO. Even though it holds fewer companies than VTI, it captures the majority of the total market's value because large companies dominate the economy. So VOO still gives plenty of diversification and delivers strong long-term performance with extremely low fees. For many beginners, VOO is one ETF that covers everything because it's pure simplicity. Big companies, stable growth, low volatility, low fees, and historically strong returns. Now let's talk about global exposure. Some people want one ETF that covers not just the United States, but the entire world. In that case, you'd go with a global ETF like VT, the Vanguard Total World ETF. VT invests in over 9,000 companies all over the globe. The US still makes up a big portion, but you also get Europe, Asia, emerging markets, and more. It's the closest thing to buying the world inside one investment. The trade-off is that global ETFs can grow slightly slower than US-only ETFs, because many markets outside the US have underperformed long-term. But for investors who want worldwide diversification and exposure, VT is a solid single ETF option. So now we have three real candidates for a one ETF portfolio: a total US market ETF like VTI, an S&P 500 ETF like VO, and a global ETF like VT. How do you decide which one is best for you? Well, it comes down to what you believe in. If you want the entire US stock market, large, mid, and small companies, choose VTI. If you want the biggest and most stable companies driving the economy, choose VOO. If you want global diversification and exposure to international markets, choose VT. There is no wrong choice here. The important thing is consistency and long-term discipline. The reason a single ETF portfolio works so well is because it eliminates complexity. You don't worry about balancing sectors, rotating stocks, or timing the market. You don't need advanced knowledge. You simply invest regularly and let compound growth work over decades. That simplicity helps more people succeed than any complicated investing strategy ever could. Fees are also a huge part of the equation. All three of these ETFs, VTI, VOO, and VT, have very low fees, usually just a few dollars a year for every $10,000 you have invested. Low fees matter because they allow more of your money to stay invested and grow. Historically, US market ETFs like VOO and VTI have delivered strong growth, averaging around 8 to 10% annually over long periods. Global ETFs like VT still perform well, but usually a little lower due to slower growth in other regions. In the end of the day, choosing a one ETF covers everything portfolio is about peace of mind. You want something simple, diversified, and built for the long term. Something that doesn't require constant monitoring or decisions. One ETF makes investing easy, and easy is what keeps beginners consistent. Whether you go with VOO, VTI, or VT, all three give you broad exposure, low fees, and long-term potential. The most important thing is starting, not perfection. Start investing, stay consistent, and let time do the heavy lifting. One ETF can truly build wealth if you give it time. For more simple, beginner-friendly ETF breakdowns, be sure to subscribe and check out the rest of our videos. Let's make investing simple together.